Okay, I'm almost out of my energy drink. Today we're going to talk about Safeco, and we're going to do a review on them. There's a few things we need to talk about. There's some horrible reviews online that we got to go over. There are some great reviews online, so there's a mix. I went to zebra.com, I went to Wallet Hub, where they both say two different things. So let's break down this barrier and talk about, is Safeco a good company? Are they a good fit? Now, I'm going to talk about some of the pricing too, because some of these companies give some averages, and that's where Safeco is crushing it. They are a really good competitive company in most states that if you have a decent insurance score, if you don't have claims, and we're talking about any claim, we'll talk about that in a moment, and you are overall a fairly decent driver, even for young drivers sometimes, they're competitive. That's the cool part. What I would recommend, if you are shopping and you are going to check out Safeco, the company that I am partnered with is linked below, and they use Safeco as one of their companies. So if you're looking to shop around, go ahead and check them out in the link below. If that is the case and the route you're looking, I would say check out the link below, because they are going to give you a good comparison price-wise to see if they are competitive in your area. So according to Value Penguin, Safeco is actually one of the more competitives. If you compare them against State Farm, you compare them against Progressive, and you know on this channel I fairly like Progressive. They're a great company. If you compare them to Geico, in most cases, single driver licensed 14 to 25, they're crushing it. They're averaging $1,700-ish a year versus your State Farm, which is about $2,400 a year. And you've got your Progressive at about $2,000 a year, and you've got your Geico about $2,100 a year. So for younger drivers, Safeco is actually a decent fit. I challenge that in some states because I personally have used Safeco and quoted them across the Progressives and the Nationwides and all of those guys that I've worked with. And they're not necessarily the most amazing with young drivers in some scenarios. So I guess it's a state specific. If it's something that, according to the data, that's what it is. But I would say it's a 50-50 shot of they might be really high, they might be really competitive. That's one of the reasons you want to check it across a couple different options. For more of your married couples, so anyone 40 and up that's married, you're fairly even across the board. Everybody wants that type of client. That's the way Safeco is geared. That's the way Progressive wants to be geared. That's the way State Farm, Allstate, Farmers, those are like the hardcore. Everybody wants the 40 to 50-year-old. So you're going to see common numbers. Your Safeco is $2,973 a year. Your State Farm is $3,038, so a little bit higher. Your Progressive is $3,200, and Geico actually is more competitive at $2,962. So they're about $11 a year cheaper than the Safeco policy. Granted, in my opinion, if you're chosen between Geico and Safeco, there's a few reviews I've done on both of them, and I would personally lean towards the Safeco depending on your area and the reviews. I'll link a video at the end of this that talks more in depth about that. So positive or negative, Safeco started in 1953. It's not bad. They've been around for a while. They actually started under the company The General, which is probably a different company than you see today because that name is still out there for something completely different. There hasn't been a whole lot of acknowledgement and certifications and whatnot because Safeco has kind of been running in the background. If you've ever heard of a company called Liberty Mutual, one of the largest companies out there, they own Safeco. Just like Allstate owns Esurance, just like Farmers owns Foremost or Bristol West. There are sub-companies to most companies. And part of the original branding and the reason Safeco became its own or started its own entity is because your Farmers, your Allstate, well, not Allstate as much anymore, but it used to be your Allstate and your Liberty Mutuals, they're independent. They're brick and mortar. Their foundation is agents. They built their company on the backs of agents. They're the ones going out promoting that company. But because they're exclusive, they don't have the opportunity to sell other products. We don't want a Farmer's agent selling a Progressive policy. We don't want a Farmer's agent selling the other brands. The independent side has grown more and more every year, where it's actually overpowering the exclusive agent today. Because having the power of 5 to 10 additional companies, you're not likely going to lose that price battle. You shouldn't be selling that away anyways if you're an agent, but that is part of the reason Safeco exists. They are in the independent side, so not only do they have a foothold in the branding of Liberty Mutual, they've also got a foothold of being part of the independent to where they're not going to lose out on that portion. I actually recently attended one of their events to see some of the updates that they're having, and there's some pretty neat things that they're actually combining because they now own another company, State Auto, which is another auto company that has been doing fairly well in a lot of markets. They're more of a digital presence versus Safeco, which is trying to grow and become the agent of the future. They actually have a program for that is designed to promote and show growth. It's designed to have programs that promote and actually invest. They partner with agents to help them get foundations going, to help them give back to the community, to help them do a lot of different things. So as far as a presence and a wanting to be part of the everyday, Safeco has a really powerful pull. It wasn't until 2004 when they really started focusing on home and auto. That's property and casualty, as we call it in the agents world. And that was really a big push. And it wasn't until 2008 until Liberty Mutual purchased them to become part of their sub of companies. That's really the history of how Safeco became to be. Started off as a general, became the Safeco, started doing home and auto, where they were doing well with tenant insurance or renter's insurance style insurance, but then they moved into that industry, and then Liberty Mutual came along and said, hey, let's be part of this company and let's have them join us. And now they've grown exponentially, I would say, because their prices are competitive and they do have a decent product. Let's dive into what we're looking at as far as reviews. So looking at the different ones, the first one that absolutely is the worst is if we look at Wallet Hub. Let's just address this one right away. 2.2 out of 5 stars. That's a no-go in my book. But if you read the reviews, it really is talking more so about the home insurance. I've read about 20 of these reviews, and almost every single one is talking about the home portion. So if you're looking at Safeco for auto, I don't see a concern there. Clearly, you can go there and start reading more of the reviews to get that research. I encourage you to do so. But most of it is like roof claims and water damage and things being denied. Yes, that could be a concern, and it's something I would look into if you are looking to do home and auto. I wouldn't necessarily say that would deter you, because what I would recommend is you learn the home side. What coverages should you carry? Keep in mind, Safeco is sold by independent agents. So when the coverage isn't there correctly, who really set that up? Safeco didn't. It was the agent in most cases. I personally know as an agent, and hopefully all of the agents out there know, water backup is an addition in almost every single company. Roofs, some companies don't give you full replacement cost on your roof. Safeco automatically offers it, but there is an option to do a percentage where the roof can deteriorate. So when you go to replace your roof, they might only cover half of it. It just depends on what interest level and what amount you want to spend on that policy. It's kind of like going to GM and saying, I want this car, but I want it red, and I want these rims, and I want it to cost this much. That's exactly what Safeco's doing. The problem that you run into, and this is same thing with State Auto when State Auto was new, same thing with a lot of the companies like Geico and some of those other companies, when they're not trained properly, then they don't give the proper coverage to the customer. The customer doesn't usually know what coverage they want to have, and so it's one of those conversations. The other problem is with the independent agents, they tend to have to grab that business sometimes. So when you're buying leads and working with people that did quotes online and they're getting 5 phone calls and your whole day is just struggling trying to get them on the phone to get them to do the quote, now they don't want to give you more than that 5-minute allotment to go over those coverages. So when you quickly throw out a number, some people just buy those. The other problem is some of these tech companies have gotten into the market. So you've got all of those tech online companies, which aren't a bad thing, but it puts the power into the customer's hands, which is great as far as the thought process. The issue is the customers don't know what coverages they want. What did they actually need for coverage? So they opt out of the water backup and they opt out of having the full replacement cost on your contents and your roof. I'll link a video at the end that goes over those, but those are the problems that we're running into, and that's what I'm seeing in the reviews. I'm not saying that all of the reviews don't have merit, because Clearly, there's an issue with the claims portion in this review section, but let's look at some other options. So if we go outside of Wallet Hub and we look at ClearSurance, they had way more reviews, twice as many reviews as the first one that popped up, which was Wallet Hub. So if you're looking at it and searching the reviews, keep in mind, you gotta look at how many people are doing those reviews. 51.82% said 100% excellent. 30.67%, so almost 80% so far, said great. 8.98% said good, 3.29% said fair, 5.24% said poor. In this scenario where you're getting more of the content, where you're actually diving in, you're seeing that the reviews aren't as bad as they seem. If you go to the Zebra, 3.5 out of 5 stars. That also is decent. That's the level where I would say, okay, let's dive in. I think I like this opportunity with this company, because 3.5 in the insurance industry online is pretty good. Most people go online to complain because they want their voice heard when there's a claim or something wasn't covered correctly. Rightfully so. That's your right to do so. In a lot of scenarios, you don't typically see people go online just to praise their insurance company. It's just not part of our process unless the company asks us to do it, which they commonly do now. There's just not a whole lot you can pull from that. So overall, I think they're probably close to that 3.8 to 4.0 out of 5 stars if you take all of the collective reviews that I'm seeing. So they're fairly decently reviewed. Looking at the coverage that Safeco offers, there's a lot of different packages. They have the essential plans, they've got these elite plans, they've got all of these different scenarios in auto, which is the cool part about them. That's the one thing I like about them most. Most insurance companies, if you look at the reviews I've done on the State Farm and all the Farmers and the Geico and all of that, they're just basic. There's a plan for car insurance. You can add towing, you can add road service, you can add gap insurance. That's with Safeco as well, and just about every other company there is. But what Safeco has done is they've included accident forgiveness, not just a checkbox that you can add that premium. It's a package, which usually makes it less expensive. So you can do claims-free renewals. You can have accident forgiveness. You can have cash back, which is kind of cool. Every year that you don't have a claim with them, they're going to give you 2.5% back in most states. Now, they also go up to 5% cash back, so it depends on the level that you pick. And what it ends up being, and I've actually seen some of those prices, to where doing the 5%, that higher package, giving you instant claims free or instant accident forgiveness versus the basic one, which gives you accident forgiveness after you've been with them for a certain amount of time. So you can pick what level and what financial investment you want to have. It's allowing you to pick the risks that you want to take. They also offer a lot of discounts. So there's a few things which we mentioned, the claims-free renewal. In addition, they offer a advance quote discount, which most companies do. When you quote something at least 10 days in advance, you're thinking ahead of time. You're not waiting till the last second. So there's an additional discount for that. They have a low mileage discount, and that's where they say they're more competitive with teens, is when you have lower mileage and you're a young driver, that's going to help. If you're driving less than 8,000 miles, there's a discount for having that low mileage. Length of prior insurance. That's one of the things that most companies look at, but Safeco, the longer you've been a customer, a tenure as they call it, with certain companies and any company in general, they're going to give you a larger discount. So if you've been with your current one for a long time, you're not likely the guy that's shopping. They're not bouncing from company to company, and that's the client that everybody wants. So Safeco builds in a discount for having that as well. The other thing that a lot of people don't know is the RightTrack system. They call it RightTrack. It's a telematics. It's similar to Progressive Snapshot, similar to the State Farm driving safe ways and whatever the case is. I've done a review on almost every single one of them. I've also reviewed the RightTrack, which I'll link here. But one of the things that they do really well with this, it's the only company that I've seen go this route. They don't track the distracted driving. At least at the time of this video, they don't. So if you are the type of person that has a phone and you want to listen to music, or you want to, maybe not supposed to check your text messages, but it's there, you know, sometimes you peek at it and the phone flips on, and maybe I watch a YouTube video driving down the road, maybe I don't know, right? So whatever the case is, you want to hear the video, but you can't turn the phone off because YouTube doesn't let you play it unless you pay for the subscription, and I'm too cheap to do that. In those scenarios, yeah, I'm not looking at the phone, but most of those telematics systems track that. Safeco's RightTrack is only tracking 3 things. Go ahead and watch the video there if you want to learn more about that piece and what they're actually tracking. If you haven't guessed it, I'm actually testing the RightTrack right now. We're averaging about $300 savings between my wife and I, seeing how the system works. I did put on a YouTube video just to test it to see how well it did. Didn't track that at all. Similar to the test that I did with Progressive, that was a decent program, but the discount wasn't as high, mainly because Progressive was tracking more things than the Safeco app does. I've been fairly impressed with how well it works, where the Progressive one, I was afraid to touch the phone. I didn't even want to look at it because it would ding me for certain situations. So is Safeco overall a good company to go with? I personally say yes. I am leaning towards them. I would say 7 out of 10 times I would go that route if they're competitive. Now, you heard me say a couple different companies where we talked about Progressive, Nationwide, and Safeco. All 3 of those are part of that link below. If you're interested in checking out companies, that's the route I would take, is to do a quote with that to see which one's the better fit. In general, I don't want to come across like I'm pitching it because there's so many good things about Safeco, and there's some of the things that look bad. You got to do your research. You got to go into your state, check out the reviews. Clearly, the home policy part, you really got to know the agent that you're talking to. That's what I found in this. I think that Safeco would be a lot further ahead if the agents had the coverages the right way. But I get it. Most agents are focused on price because that's what you were taught. That's what I was taught. We focus on getting the best deal. And by doing that, if we add the water backup and we add the 100% replacement on the roof and the matching for the shingles being a different color, and we add the water backup with contents, and we add the identity theft, and we add the additional 10% replacement cost for like codes and stuff like that, there's a cost to that. That's going to add a couple $100 to a policy. And when somebody's shopping with several different companies, it's not easy to be competitive. So a lot of companies don't even quote that stuff. So you're dealing with most companies that are already giving you the bare bones compared to the ones that offer the options. So let me know what your thoughts are. Do you think Safeco has been a good company? Have you had any issues with them? Or has there been general good experience that you have had? Let me know in the comments below. I'd love to get your opinion on what you think. If you agree or disagree with anything we said in this video, this channel is meant for the consumers. I'd love to hear your opinion. It matters on this channel. Like I said, there's a link below if you want to get a quote. Don't forget to hit the thumbs up. That helps me the most. There's a donate button on here somewhere. I turned it on at some point. It's called Super Thanks. It's there. As well as if you are going to shop for car insurance, this is a link to the one that I would look at. This is the process that I personally would take and that I was taught when I was a kid how to shop for car insurance. I'm Mark with Think Insurance. I'll see you in the next one.